All right. Okay. Good evening, everyone. Okay. Welcome to today's session over here. And again, I would like to quickly welcome those of you who are first time joining us. And of course, those of you who have been following us for some time, welcome back again. Okay. So very quickly, if you're first time here, what we do is every Monday, okay, at 9 p.m. and right now this time, we'll come in to the markets, share with you some of the weekly opportunities that I'm personally looking out for. Okay, ideally is through this process, not only it helps you to identify opportunities that you can trade in the market, but at the same time, I think it's important for you to also observe and see what are some of the processes, the methods that I personally use to analyze the market. Okay, and then the second portion of today's session is where I'm going to open up the remaining time for Q&A. Okay, so if you have any questions regards to like trading or investing that you'd like to clarify, today's session is again a very good opportunity for you to ask. And let's say if you have any particular forex pair or even any particular asset that you'd like me to share my view and analysis on, you can also utilize the remaining time for today's session to kind of like just type it into the chat box. I'll be able to look at them and then I'll share with you my opinion on it. Okay, yeah. So great. Let's get started for the week. So you can see over here, this is the events, risk events calendar for this week. Okay. So today, of course, is holiday. Okay. So naturally, the market is gonna be slow. I think if you're looking at the FX pairs, they are already very slow. Okay, because you have the UK side having a bank holiday, and after the US session right now today is also holiday. Okay, so basically quite quiet in the market, right? So the real activity for this week is actually going to start tomorrow. Kicking off with, of course, you can see here RBA rate statement. I don't think that Australia is going to touch its interest rate. In fact, most of the central banks are not going to like play around with their interest rate right now. They're probably going to stay the same. But what you want to then take note is more or less like the forward guidance, right? Which means that are the RBA going to be a little bit more bullish, hawkish because of maybe the economy starts to show signs of improvement, or are they gonna be bearish, right, or dovish, where they start to see, oh, maybe another wave of COVID is coming, and they're not very optimistic about the future, right? So I think the forward guidance is a bit more important because that would then give you some clue as to whether they're gonna raise rate faster or they're gonna prolong and delay their rate hike in the future. Okay, so that's gonna give you some idea as to how gonna trade your Australia dollar. Okay, and of course, every first Friday of the month you have the NFP, right? Which is where a lot of traders, if you're trading at FX market, kind of like anticipate. Okay, now I would suggest that while NFP is important, okay, I think right now what's more important is to keep track of the inflationary pressure in the US and of course globally. Okay, now this is important because I think while employment plays a key part into the economy, I think right now, with the current COVID situation and things like that, more or less we have already, or I would say majority of the economists, analysts, as well as traders have more or less anticipated that it's not gonna look good. Okay, so I would say the labor data side like NFP, unemployment rate, are not gonna shake the market too much, but inflation is. Okay, now why I say that is because recently, last year onwards, the Fed has decided to kind of like change a little bit of their policy, because usually, okay, by default the policy is that they are allowing, or they would like to hit an inflation target of 2%. Okay, and what was changed slightly last year is that the Fed decided to let short-term inflation to overrun a little bit, which means they allow a short-term overheat of the economy, allowing it to grow beyond 2% in order to pull up the long-term average inflation. Okay, so definitely with that in mind, of course, as traders, even if you're not trading, as investors or even as laymen, normal people, okay, citizens, okay, you need to worry about inflation. Okay, because when the Fed allows it to overrun, by the time they want to control it, it's usually a little bit too late, right? Which means you might start to experience significant inflation in the next, I would say, maybe about 1 year or two. Okay, where of course the people who's going to suffer the most are the citizens, right? Because then your prices of goods and services are going to be rocketing, okay? So the idea here again, then you want to keep track of the average hourly earnings. Okay, why I say that is because if the average hourly earnings is going to beat expectation and keep showing that inflation is going to overrun very, very fast, right? Maybe sooner than what majority of people are expecting or even the Fed is expecting, then we might start to see maybe an earlier rate hike. Okay, and if that happen, of course, we might see some strength coming into the dollar. Okay, so you want to keep an eye on that, right? And that's why I want to spend some time today to emphasize on that first. Okay, but having said that, I personally don't trade off news events like that, but I'm using it more of like a fundamental backdrop, an understanding of what's happening in the economy to kind of tie in into the week-to-week trades that I take. Okay, so over here, maybe I'll kick off by sharing with you the dollar index chart, okay, the DXY, to give you an idea as to where I'm looking at it from a technical point of view. Okay, now at this very moment over here, we are looking at the daily chart on DXY, which is the dollar index. Okay, I would say short term wise, when I mean short term, maybe a couple of weeks to maybe 1 or 2 months time, there's a very high possibility dollar is gonna continue weakening. Okay, purely from a technical point of view. Okay, probably coming down towards around $89.20. Okay, which is where your previous day low was. Okay, so with that, once price tag around $89.20, you want to keep an eye on it. See how price is going to respond and react from that level. Okay, so it can either do a rejection and depending on how it's going to play out, it might be the part where dollar starts to strengthen a little bit, or it can simply just be a corrective move, and then after that it keeps breaking down. Okay, we need to see by then. Okay, but for now, for the next 1 or 2 weeks, if you're looking at the dollar, I think there's still room for it to depreciate further. Okay, and go towards $89.20. Okay, now this is important if let's say you are trading like major pairs of the FX market, or if you are looking at commodities, or if you are looking at maybe stocks. Okay, I think the dollar here is going to affect all these different assets. Okay, so have that in mind. I think for the next 1 to 2 weeks, there's still room for dollar to drop. Okay, so with that, let me jump into some of the potential setups that perhaps you want to keep an eye on as well. Okay, so I'll start off with Aussie Yen. Okay, over here, maybe I'll clean up the chart a little bit. In fact, I would say most of the yen pairs are more or less similar. Okay, so if you can take a look at it, Aussie Yen, Euro Yen, Kiwi Yen, more or less they are telling us the same thing. Right? So the direction, if you're looking at the yen pairs, I would suggest that you want to focus on the downside, which means focus on sell opportunity. Right? So start off with Aussie Yen over here on the daily. Okay, we trade. Some of you may be new, so I'll quickly introduce to you the methods of how we look at the market. Okay, they are based on Elliott Wave principles. Okay, so Elliott Wave principles, again, a lot of people have the impression that it's very complicated. There's this count of 1, 2, 3, 4, 5 ABC, but over here what we do is we simplify it, okay, and we focus more of like what are the patterns that we are looking out for. Okay, so over here on the yen pairs, we start off with Aussie Yen. Okay, you can see that this is going up, but it's starting to kind of form a slower move, right? In other words, it translates to lack of momentum. Price is slowing down as it's going up. There's no more energy, there's no momentum, and therefore, whenever we see something like that, there's a higher chance this will reverse. Okay, and of course, for some of you who are a little bit more advanced in your technical, okay, you can also see that there is a divergence happening in our momentum indicator on RSI, which again suggests that there's a potential reversal coming in. Okay, so all this suggests that again the downside is where we want to focus on. Okay, so from there I start to go to a lower time frame, and what I can see over here is from this high, okay, we have a push down, and then after that it starts to go sideways, right? More or less like a consolidation. Okay, and again, this is one of the patterns that we can recognize. You have a very strong move down, and then it goes sideways, it forms a correction. When we have this kind of combination, again, it suggests that the direction is to the downside. Okay, so from a higher time frame, it's telling me focus on the down. On the 4-hour time frame, it's also telling me focus on the downside, right? And of course, with that, if I were to bring in this line here, you can also see on the 4-hour time frame, we have kind of like a topping formation, right? So while this is consolidation, this forms kind of like a mini, maybe double top or even triple top formation. Okay, so it's also telling me that focus on the downside. Okay, and if I bring you to the 1-hour time frame, okay, same thing here. You can see this is a very strong push to the downside, and what I'm observing is this can be the correction that's forming. Okay, so right now there's of course this opportunity to kind of like focus on the sell trade somewhere around here for the downside. Okay, so again, I'm not able to give you exactly where to enter, what strategy to use, simply because you know, not that I do not want to share too much. It's also because that you need to understand there's no such thing as the perfect strategy. Okay, so what works for me might not then work for you. Okay, so the idea here is then you probably need to go and explore a little bit like what technique of execution, what strategy is gonna fit you. Okay, yeah. So the idea here is I'm just sharing with you that you want to focus on downside, and right now, you don't have to rush in today because the market is closed, US is closed, UK is closed. Likely the price is not going to move a lot, but the real action is going to be tomorrow onwards. Okay, so keep an eye on that. Okay, depending on your execution, I think this is where you want to look out for it. You can even look at maybe a smaller time frame. Okay, like let's say 15-minute, right? So you see this. Perhaps this more push, and then this is like the flag. You're able to take that trade as well. Okay, so again, patterns tends to repeat itself. I want you to be able to see this here, where you get a small push and then a sideways move, is actually also visible in our time frame, right? Impulse, a very strong push, and then if this is the correction, this can go too, right? So similar, just different in scale and different in size. Yeah, so same thing over here. You can see this is what we talk about. Okay, the move is still going up, but it's very slow. We call it the crawl. Of course, if you bring in your RSI, okay, let me bring in that. Okay, you will be likely seeing divergence too. Okay, so similar idea, which I show you on the daily time frame, just different scale. Okay, yeah, so focus on Aussie dollar. Aussie yen over here. Now, having spent some time to really dissect this pair for you, I think if you go to other currency pair related to the yen, okay, probably you see start to understand a little bit more, right? So this is on the daily chart. You can see, yes, market is definitely still going up. Okay, so the idea again, when I say we are focusing on the sell, I'm not suggesting that you go and sell it now, right? The idea is the big picture direction for the week is to sell, but you still need a proper plan to execute that trade. Okay, so Euro Yen is still the same. The direction is down. You can see on the 4-hour is very clear. Okay, this is what we call the crawl pattern. There's a higher chance that this will reverse. Okay, it's not going to be 100%, but when I mean higher chance, somewhere around 70%. Okay, and to me, is good, right? 70% is good. Okay, so focus on that. But I think, you know, on a 1-hour time frame, maybe on Euro Yen is not as ready as Aussie Yen, right? So Euro Yen here, I suggest that this can still potentially go back up, maybe forming kind of like a 1-hour double topping formation before the drop. Okay, so you need to be aware that this can happen too on the Euro Yen on the smaller scale. Of course, you need to have, you know, some of you trade double top, then great, okay, you can look out for that. Some of you maybe will wait for the neckline to be broken. Okay, then yep. Okay, whatever strategy you are using, again, it's never about which one is the best. Okay, it's about which one that is suitable to you, which one you are aligned to. Okay, so keep an eye on Euro Yen as well for the sell. Okay, now Kiwi Yen is more or less similar to Aussie Yen. Okay, all the yen pairs in fact are more or less similar, right? Let me show you on the daily. Again, this move up is very, very slow. Okay, so you can see how this has broken the top, but again, you're looking at a daily rejection coming down here as well, right? So from a daily chart here, I would say the downside is a little bit more attractive. There are more room for price to go down compared to like looking for the buy at this moment. So same thing, the direction I would suggest to focus on the sell. What you get is this kind of reaction, right? A rejection pattern. So maybe what I would suggest is you give it Monday, today, Tuesday, and Wednesday, right? Give it 2 more days. If let's say by Wednesday, maybe evening time or Thursday morning, okay, if you come in and you see something like that, okay, a correction, so you get this combination of impulse and correction, then right, great, you'll be able to take that trade to the downside. Okay, again, depending on what strategy you have to execute. Okay, but the idea is to look for the sell. Okay, so these are the 3 yen pairs. I think is pretty clear, setting up opportunities that you want to focus on for this week. Okay, yeah. Now other than that, there are the pound dollar and dollar CAD, right? Maybe I'll talk a little bit about pound dollar over here first. Okay, so go back to the daily chart. Okay, on a higher scale, pound dollar, I think it's pretty clear cut. Okay, first off, you can see this is the high that was established in February this year. We are pretty much close to that high, right? A couple of pips from there. So right now, one thing you want to keep an eye on is reaching this top, right? Which means potentially you might get some reaction from there. For those of you who are looking at like maybe supply demand, support resistance, similar principle, similar concept. Okay. Right now, what you can see even on the daily chart is that this move to the upside seems to be slowing down, right? Again, lack of momentum, lack of energy, likely telling you a reversal is coming. Okay. So with that in mind, again, if you go down to the 4-hour time frame, you can see how this is super clear. Okay, the pattern here. And of course, we talk about this combination of a very strong push as an impulse and then a correction, right? You can see how this pattern here plays out too. Okay, so you have this combination, very high chance this will go up. You have this combination here, very high chance this will come down. Okay, so these patterns tends to repeat over and over and over again in different markets, in different time frame. The idea is just get yourself familiar with it, and then to help you in your trading. Okay, stop. So right now, what I'm expecting is this can easily still push back up, but what I'm seeing is from the big picture perspective, this is more attractive to the downside. Okay, so what I would suggest is that I'm looking at pound dollar, but you want to give it time. Okay, you want to see price breaks off the 1.4240, reject down, and then form this combination of what we call a flag, and then from there, that's ready for you to sell. Okay, so the direction is clear. You need to give it a little bit of time to develop something that you can recognize in terms of the patterns. Okay, yeah. So for this to develop, you might need to wait until, I would say, maybe Thursday or Friday. Okay, closer to the end of the week. But sometimes hard to say. Maybe the market becomes very volatile. You might develop this pattern faster. Okay, but based on my expectation and my experience over here, for this to develop, you might need to wait until like Thursday or Friday. Okay, for this setup here to show it to you. Okay, so this is on pound dollar, very very clear setup as well. Next up is dollar CAD. Okay, basically this is just the inverse of pound dollar, right? Just flip it, exactly same pattern, just opposite direction. Okay, so same thing over here. We are seeing this as a crawl, as a very slow move to the downside. No momentum, no energy. Focus on the reversal. Okay, over here, I think similar idea as pound dollar as well. You want to wait for this to dip below this structure low, which is 1.2010. Okay, and wait for the reversal and then wait for the small flag. Okay, and then from there, this is where you take this trade to the upside. Okay, very very straightforward. Similar to pound dollar, just opposite direction. Yeah, so same thing. This one you probably need to wait until like Thursday or Friday for you to have the opportunity there. Okay, last one here in my watch list in terms of FX for now. Okay, is Euro Australia again. I think by now you can see what I'm looking out for, right? This is more like a crawl. On the daily time frame, okay, this can easily be pattern that, something like that. Okay, so same thing, you can see a very strong push to the downside, consolidation. Okay, and this is where you expect this move to come down. Okay, towards 1.5250, that's our potential target. On the lower time frame, on the 4-hour time frame, this is forming here as well, right? So there are a few possibilities how this can eventually develop. Okay, first one, of course, if I just remove all this line here, this can just play out as maybe kind of like double top formation over here. Then you have, of course, the neckline here, and you trade the breakout of this double top formation. Very, very simple technical patterns, right? The other setup, of course, is this can happen too, which means you are more or less expecting kind of like a crawl, okay? Or in a technical term, we call it a diagonal, right? And if this is going to develop into a diagonal, this is likely going to react and bounce off from that low and then come back up, and then only from there it starts to drop, okay? So two ways to look at it. Again, I can't tell you exactly which is going to develop right now. Need to give it some time for the market to show to you which is likely to happen. Okay, so either this is going to be just the top and then break off from here, or this can go back up somewhere around here. That's your entry area, and look for that reversal. Okay, nonetheless, I think the direction is still clear. Euro Australia, if you're looking at this for it, this week you might want to focus on the sell side. Yeah, so this is on Euro Australia. Okay, so hope that's clear. Mainly these are the two. Maybe I'll just quickly also cover some of the commodities here, like gold and then Bitcoin, right? Quickly talk about that as well. Now gold chart on the daily time frame. I would suggest that do not get overly excited and jump into buy, right? Probably you're gonna see a lot of news headlines, or even let's say some of the social media groups, traders sharing about how gold has rallied so much. Don't miss out on things like that. But looking at the technical chart, okay, there's a very good chance this will consolidate. Okay, or it can just react and come back down, right? But from a fundamental and I would say macro perspective, I would suggest that this is likely going to happen, right? The probability is higher in terms of a correction. So there's no need for you to rush into the buy. I think the idea here is to wait for something to develop like that. And because we're already on the daily scale, so for something like that to develop, you might need to give it maybe a couple of weeks, right? Maybe 2 to 3 weeks. And by then, if you see something like that that's super clear, that's your cue. Get into the buy for a potential move further up towards 2074. Right? So fundamentally and from a macro perspective, I will not suggest to focus on the sell, but instead, every time you see an opportunity to get involved in the buy, you want to get involved in the buy instead. Okay? Why is because from the macro understanding of what the Fed is doing, from a fundamental point of view, based on supply and demand of the US dollar, there will be a massive devaluation of the dollar. Okay, and when that happens, of course, your commodities are gonna rally, your precious metal gonna rally. Okay, you just have to look back as to what happened in 2008, 2009, all the way until 2011. Okay, similar situation where back then in 2008, the Fed actually prints a lot of money, right? So supply and demand plays in. The whole effect kicks off in 2010 to 2011. So what we're experiencing right now is more or less similar. You see the Fed prints a lot of money in 2020. So we are coming into maybe, one half a year already. Okay, so we are almost like halfway point in 2021. So maybe this effect will really kick off at the end of this year or even 2022. Okay, so keep an eye on that. Okay, I think that's where the massive opportunity is gonna come in. Okay, the move is gonna be very, very fast. Okay, because if you take a look at that, back in 2008 and 9, okay, so this is where you can see that move happening, right? So you can see this is how small it is right now. Okay, so if I take a scale of this, map it here, that's where your opportunity really lies. Okay, so focus on the upside on gold and silver, right? Basically your precious metal. Okay, now if you are taking a look at the crypto market like Bitcoin, Ethereum, or some of the alternative coins, I would just strongly suggest that you want to be very patient on that. Just be cautious, okay? Because what I'm saying right now, it seems like it's forming a consolidation. Right, this is on Bitcoin, right? It looks like it's forming a consolidation. Okay, and there are two things that can happen. Obviously, we do not have sufficient clue right now. We need market to give us a little bit more information, right? So we need to give time for it to develop. Of course, this can develop into a flag that looks something like that. So you have this impulse push, okay, a very strong push to the upside, a flag, and then this is where you can anticipate this to continue higher. But at the same time, okay, this can easily just form something like that, comes back up, and then from here comes back down, maybe form a double bottom or even break that low before the push. Okay, so right now there's not enough clue for me to kind of like share with you which one has a higher probability of happening. To me, it's more like 50-50 right now, right? And usually, when you don't have any advantage or any clue, I would suggest you just stay out of the market. Okay, so the key area that if you're looking at Bitcoin, I think the key area you want to focus on is over here. Okay, how price actually react off the 40,800 level, as well as this bottom here, how price react off around that 33,600 level. Okay, so keep an eye on these two levels here. You want to see how price react off it. Okay, if let's say this breaks off to the top side very strongly and it starts to give you that small little correction, then definitely look for a upside, right? Because then this becomes a very clear flag. Okay. However, if let's say it comes back up to 40,800, okay, and then after that it starts to face some rejection and come back down, then this here forming a flag that looks something like that has a very high chance this will continue down. Okay, so now we need to give time to the market and show us what it wants to do. Okay, so yeah, okay, so that's basically some of the things that I'm looking out for this week. Okay, so yeah, hope it's clear. Hope you guys actually pick up a thing or two. Right now I'll kind of like open up this session for Q&A. Okay, so if you have any questions that you would like to clarify regarding trading and investing, right, just put it into the chat box. Then from there I'll be able to look at them and share with you my thoughts. Okay. So I see Jimmy over here actually asks the dollar CAD that we talked about just now, right? There's a big probability to go up. So do we need to wait for the Fed news, or just use technical? Okay. Now, very good question, right? Because a lot of times, you might be asking like, there are so many ways to look at the chart, or I would say so many ways to look at the market. Based on fundamental, based on technical, based on news. How do you make sense of them, right? How do you kind of complement each other, or how do you put them together? Okay, which one is it more important? Now over here, okay, I'll go back to the dollar CAD chart. Okay, and what I'll do, okay, maybe I'll share with you a little bit in my opinion. Okay, big picture here, right? Fundamental versus technical. Okay, so I see a lot of traders like, they like to stand on one side, right? Some traders would say fundamental is super important because that's what moved the market. Then the technical traders will come and say that no, right, everything is actually shown on the chart. Technical is more important. Okay, now to me, this is how I see it. I feel that both are important, both have its strengths and weaknesses. Okay, so I think it's important that you also understand like what are the strengths of fundamental, what are the weaknesses of it, and vice versa on technical side. Okay, so from fundamental point of view, right, the pro here is of course it gives you kind of like a good understanding, okay, of market forces. Okay, I'll put it that way. Which means that today, right, if let's say the dollar weakens, right, why I say that based on macro, based on fundamental, the dollar is gonna weaken in the next 6 months to a year, is really coming from the understanding and the principle of fundamentals, right, demand and supply. Okay, so fundamental, when you understand it, it gives you that good understanding, right? And I think this is important, right? It's not just about understanding the theory, but this would translate into, I would say, confidence, okay, and maybe also clarity, okay, in the direction, the trades they're taking. And of course, with that comes along conviction, right? When you execute that trade, you have that conviction in it. Okay, so this is actually I would say the strength of fundamental. Okay, to really simplify it, right? But of course, there's also the weak side of it, right? So the weakness of fundamental is that timing. Okay, So you realize that when I talk about like the dollar has a high chance of weakening in the next 6 months to 12 months, right? 6 months to a year. There is the time element, but you realize that it's a very broad horizon, right? Because from a fundamental point of view, you can't have like specific time. Okay, that is the downside. That's the weakness of fundamental traders. Okay, and usually how fundamental traders can overcome this is they tend to take maybe bigger stop loss, right? Smaller positions so that they can widen their stop loss to account for that imperfect execution, right? So I think fundamental, the main weakness is really timing. Okay, and if today you don't know technical, you won't overcome that weakness of timing. Okay, so to keep things simple, one strength, one weakness. Okay, and of course, technical over here, then the best would say the strength, okay, is that it's allowing you to know about the timing. Okay, because why? You're actually looking at the chart to kind of time your execution, right? That's where you see me looking at technical charts. I'm able to roughly give you an idea. This setup tomorrow you can look at it. This setup maybe on Thursday or Friday. Okay, so technical charts give me that timing. Okay, and with the better timing, it then therefore translates to better. Okay, I would say better execution. Okay, and this better execution actually leads to, I would say, better risk reward as well. Okay, why? Because you are able to now enter at a much higher precision level. You can enter with a smaller stop loss, and therefore smaller stop loss enter with a bigger position, and your risk reward is way better, right? So that's the idea of technical. Okay, and then there comes the weakness of technical. Okay, technical does not give you the understanding of the market. Okay, so they are basically, if you take a look at it, they complement each other, right? Now a technical trader, if you ask them, if they don't have any backdrop or understanding about the fundamentals, right, they can't really explain to you what's happening behind all this move, right? They would probably just say, oh, there are people buying and selling, and therefore you see the price like that. Yeah, to a certain extent that's true, but that's a very, very simple way of saying or just kind of explaining it, but that really means nothing, right? So a technical trader probably without any understanding of fundamental won't be able to explain to you like why certain things happen. Okay, so I always say as a trader you want to know both. Okay, but at the end of the day, okay, back to the question over here is how do you apply them? Okay, so to me, if you try to kind of like have everything in the world aligns for you to execute a trade, it's like waiting for the perfect star to align. Okay, or waiting for a shooting star, right? It can happen, but you probably need to wait very, very long. Okay, so you do not need that. Okay, so what you want to then do next is you need to find a good balance. Okay, so this is not like the perfect answer, but this is how I do it. Okay, I would say about 70% of my trading decision comes from technical. Okay, which is looking at charts, right? That's how 70% of my weightage of my analysis contribute to whether I'm gonna take that trade or not. Okay, and then I would say the remaining 30%, okay, comes from fundamental, comes from macro, comes from maybe sentiment. So basically all other factors, okay, that can affect the price movement. That's where it comes in. Okay, so I have this to guide me. So sometimes you might realize that just now I talk about how dollar is weakening, right? 6 to 12 months. My macro fundamental is telling me that the US dollar is going to weaken. Okay, but at the same time, if you look at dollar CAD chart, we are looking to buy the dollar CAD, right? So you might be starting to think, if the dollar is weakening fundamentally, but we are looking to buy the dollar here, okay, how do we resolve this conflict? The idea again is to fall back to your plan. Okay, and my plan over here is 70% of my decision is going to come from technical. Okay, so I'm still probably going to take the buy, but I am aware right now that this buy on the dollar CAD might not work out very well, okay, because there's still that fundamental force. And at the same time, you also want to understand when we are looking at FX pairs, it's not just one currency we are touching on. Okay, the dollar CAD here has the dollar plus the Canadian. Okay, so what can happen is, yes, maybe the dollar weakens, but if the Canadian is weakening like 5x, 5 times more than the US dollar, this will still shoot up. Okay, because this is a ratio, it's a proportion, it's comparing the value of two currencies. So if one weakens but the other weakens way more significantly, then the price of this particular pair can still go up, right? So with all this, understanding all this, again, then I would probably still be buying it. Okay, and then back to the part on the detail of, do I wait for this news? No, okay, I don't trade the news itself, but I understand that if Friday is gonna release, on Friday is gonna be releasing a very important data like inflationary pressure data, like average hourly earning, or even NFP, the labor data, important, right? We call this kind of news tier 1. Okay, so it's basically just like priority, right? You have tier 1, tier 2, tier 3 kind of data. So NFP, inflationary data, is more or less like tier 1, very important data. Okay, so the idea again is, I don't trade them, I don't wait for them to be released. Again, my decision is purely based on 70% purely based on technical, right? There's no news involved in it. So I understand there's a news coming in, but I don't wait until then if there's a setup on, let's say, Wednesday or Thursday. But knowing that there's a news on Friday, it helps me to prepare myself in expectation. So I know that if there's something so important on Friday, naturally what will people do? They will want to wait until Friday happens, right? I think this doesn't only apply in trading, right? But the idea here is same. In life, if there's a very important news that's upcoming maybe tomorrow, that's gonna affect your business, affect maybe your livelihood, you probably won't make a major decision until that news is being announced, right? Makes sense, right? Okay, so same thing in trading. If there's a very important news on Friday, then most people would probably wait and sit out until Friday. Then how does that translate into the market? The market is probably not going to move a lot all the way until Friday. Okay, so have all this understanding, and I hope, yes, it's a very simple question of how we manage it, but I want to go a few layers deeper so that you understand the whole picture of where I'm coming from. Okay, not just based on like I don't want to just give you an answer of like yes and no. I want to make sure that you understand why, okay, and where I'm coming from. Yeah, so hope that helps. Okay, so I hope that also answered your question, right? So basically, this part here can give you a better understanding of how I approach it. Again, this might not be the same for you guys, right? Some of you maybe it's 50-50. Okay, some of you maybe more towards fundamental. Okay, really depends on your personality. Okay, I see another question over here by Krishna asking about pound cat and pound franc. Okay, so great. We'll take a look at that two pairs. Okay, let's take a look at pound cat first. Okay, very quickly over here. Personally, I'm still looking at this, but I highly doubt this is gonna move much this week again. Okay, so you can see first off, we have this push to the upside, and then since then, that was like mid-May. For the past 2 to 3 weeks, is just going sideways, right? A very long consolidation. Okay, so the direction over here is pretty much very clear. We are focusing on the upside. Okay, I did put in a little bit of FIP over here as well, where you can of course also reference to it. But I think the direction wise is clear. Okay, I'm focusing on the upside. But this is really right now, the longer this stretch out, the harder it becomes for me. The conviction level drops. Okay, but the idea here is that you want to keep an eye on this zone around 1.7. If let's say price were to come down here to 1.7, that might be a good area for you to consider for a buy opportunity. Target here is 1.7585. Okay, so I think this one here very clear. The direction is clear. It's just more of like the execution phase. How are you gonna take that buy when the opportunity comes? Okay, so this is pretty clear, right? Very clear cut, right? Target is 7585. Yeah. Pound franc. Okay, actually I have a glimpse on that as well. But this probably need to be patient a bit more. Okay. Now I'll show you on the daily. I think daily is a bit clearer. Okay, you can see patterns again. This is a very strong move down. This is sideways. So direction wise, very obvious. Focus on the downside, right? Target is 1.2275. On the 4-hour chart, okay, I think maybe this one here, you give it another 2 or 3 days. The idea is you can see it starts to crawl. Okay, you want to see it develop something like that, right? Ideally coming back up to here, so you have that triple touch, triple top, with a very slow move. That's your trade to take it to the downside. Okay, for that to develop, you might need about 2 to 3 days. Okay, so if you're looking to trade the pound franc, keep an eye on this level, 1.2815. See how price is gonna react off that level. If it's a setup for you to sell, fantastic. Take that trade all the way back down to 2.5. Okay, so that's pound franc. Okay, so give it another 2 or 3 days. Okay, you might have that setup going. Okay, okay, I have a question here with regards to like management of trades as well. Okay, so the question is how to deal with sudden fake out that hits your stop loss and eventually move in the direction as planned. Okay. Now first off, understand that such thing happens in the market. Okay. Now I think if let's say you get fake out, you need to track your trades, and let's say the probability of you getting a fake out is maybe out of 20 trades you get fake out maybe 1 to 2 times, right? So the probability is maybe about like 5 to 10% of your entire trade. Okay, that's fine. Okay, again, we are not looking for perfect execution, right? There's no such thing of it. Okay, so if out of maybe to keep things simple, out of 10 trades you get 1 fake out, okay, I think that's still fine, right? Sometimes maybe 2 fake outs, I think it's still fine, right? So if you put that into probability, maybe out of 10 trades you take, there are 2 trades that end up losing, and then there's 8 trades, maybe some break even, some profitable. That's a very good stats, right? So again, you want to first analyze that, right? Don't try to fix every little detail and try to perfect your execution. But however, if you, let's say out of 10 trades you take 5 of them get fake out, means hit your stops, and then only eventually go in the direction that you forecasted, which is you should make money, then you want to work on your execution. Okay, so that's something important first, right? So when you ask this question, assuming if the number of the trades that you get stop out is not big, okay, in relation to the number of trades that you take, it's perfectly fine. It's normal, right? All traders get losses. The idea is, of course, you want to cut it quick. Okay, but if today you take, let's say, 5 trades and 4 trades are in this situation, then you want to look at how you're gonna time your entry, which means maybe you entered too early, and you need to work on maybe give it a little bit more time, to be a little bit more patient, then only execute the trade, right? So this comes down to the execution method. Okay, hope that helps, right? So every technique will have stop losses, right? Every technique will have losses. Don't go for 100%, okay? But work with numbers, which means if you get a solid 70% accuracy of your trade, that means based on good enough sample size, you have 60% of your trades are winning. You are great, okay? You are good. You're doing well. Okay, just focus on managing your risk. Make sure that risk to reward is in your benefits. You're gonna make money. Okay, helps, huh? Okay. William here asked about Euro Pound. Okay, so let's take a look at Euro Pound. Great. Okay, so this is the analysis that we have done some time back, I think 2 weeks ago. It's still more or less there. Okay. On a daily scale, you want to focus on the upside. Okay, why? Okay, you can see this, right? Very strong move, and then correction. Okay, so you are expecting this to go up. Okay, so I would say on the daily, the direction is pretty much clear. Okay, you want to focus on the buy side, but give it some time for it first to come down to 0.8560. Okay, now why I say that is because on the 4-hour chart, okay, you do see this, right? Very strong move sideways, expect it to come down. Now it seems like it's doing this smaller move. Okay, wait for it to come down back to this low. Okay, of course it can also develop into a crawl that looks like that. Okay, and if that happens, then great, you have this small little double bottom, and you're expecting this to go up, right? Because of the daily time frame here, you're expecting it to go up this move. Okay, so Euro Pound pretty clear. In fact, depending on how it's going to develop for the next 1 or 2 days, I might also consider looking at this maybe on Wednesday or Thursday. Okay, depending again how this move, right? If this is gonna start to come down like that as a crawl, yeah, I would say very very soon you have that set up. Okay, but if let's say this develop into something like that, then you need to give it more time. Then of course this will still come down first. Then you expect it to break it, maybe form a V shape, and then something like that for you to break. Okay, if this is gonna develop, you need to wait until next week already. Okay, because from all these things to develop here, you need to give time. Okay, so I think the closest setup here is that if this forms a crawl from here, coming down to this level, then this week you might have it, but now it's a little bit too early to say what's going to develop. You need time. Okay, so that's on Euro Pound. Yeah. Cool. Okay, this question is very important, right? Jimmy actually asked this. It's a question about drawdown. Okay, so the question is, if let's say I have $1,000, is it okay for me to lose 30%? Okay, so the idea is when you hit a maximum drawdown of 30%, you stop trading. Okay, or do you need to then top up to back to 1,000? Okay, now first off, okay, I think one of the sharing I did talk about this similar topic, right, about money management. Now, first off, over here, okay, let me think about how to put across this. I think over here there are two parts you want to understand, right? There's the art element, and there's a science element of risk management, money management. Okay. Now let me talk about the art element here, right? Now the art element basically kind of like comes in as your psychology, comes in as your emotions. Okay, maybe a little bit in terms of like the discipline side of it as well. Okay, and then you have the science component of it. Okay, in terms of money and risk management, right? So the science component of it is basically the mathematical, I would say like calculation. Okay, to understand in terms of like your lot sizes, your positioning, or position sizes, right? That's the science element, right? Or even let's say your kind of like entry versus your stop loss in terms of like risk reward ratio. Okay, so that's the science. Okay, where it's very very clear cut, right? It's like going to school. You learn about math, learn about how to calculate things. There's a certain formula, very straightforward. Okay, so a lot of times I think risk management, when we cover or when you study about it, right? People always say risk management is important, money management is important. It's the science element, right? A lot of times people cover that. It's easy, straightforward. Okay, just learn how to do the formula, how to calculate it. But the art element is where it's gonna make or break your entire risk management plan. Okay, because that's where the human factor come in. You have the psychology, you have the emotions, you have the discipline that you need to follow through. Okay, and most of the time, you know about this. All of us knows about the importance of risk management, but this part here is the one that fails you, right? Or fail many traders because they can't control their psyche, their emotions. They don't have the discipline. Okay, so first up over here, when I explain this to you and ask me that question about put in $1,000 and you experience kind of like a drawdown of 30%, what should you do? Okay, is it okay? I need you to understand, because I want to break that question into these components here. Okay, Now, if today you put in $1,000 and your drawdown, which in terms of DD here, I'll put as 30%. Okay, if I translate that to an actual dollar amount, that's $300. So again, depending on your art element, which is your relationship with money, okay, some of you who is online here today watching this, $300 to you might be, okay. Okay, some of you, maybe when you hear, wow, 300 US dollar, right, that's a lot. Okay, there is no right or wrong. Okay, this is again a direct conversation towards you and money. Okay, depending on how well your relationship with it, some of you might feel 300 is okay, some of you might feel 300 is very painful. So I can't give you have like a direct answer, but what I can do right now over here is more like, you can see I'm guiding you, right, to give you that chain of thought to come up with the answer yourself, because that's where it fits you. Okay, so now first thing off you want to assess is $300 an amount that you can afford to lose? And when I mean afford to lose, I'm referring to it doesn't gonna affect your livelihood. Okay, if it's gonna affect your livelihood, means you cannot afford to lose it. Okay, and if you cannot afford to lose it, then you need to first establish a better relationship with money first, which means that you probably do not want to immediately jump into trading or risking this amount, okay, because it's gonna affect your life, and that's worse, right? So first thing, I think you need to establish that. Now let's say you're fine with that, okay, then it's not a big deal anymore, right? Because if you're fine with $300 and you mentally are prepared that the worst case scenario you're gonna lose this $300, and the worst case scenario, which in this case losing $300, is not gonna affect your livelihood, then that's fine, right? It's the same principle as like today, if you go out shopping, you bought a meal, okay, maybe you never tried before, you bought it, and then it tastes lousy, yucky, not nice. Okay, maybe you spend $10 on that meal, right? It feels bad, you don't like it. Will you force yourself to finish it, or you probably just put it aside and then just let it be and say that, okay, I wasted $10, right? Then that's about it, and then you move on, right? Okay, so that's the same principle in trading when you're talking about the art element of risk management. You want to risk money that you can afford to lose. Okay, so it should be more of like, okay, if you lose $300, okay, then assess your entire strategy, then move on. Okay, it shouldn't affect you too. Now, whether you want to top it back up, that's another thing, right? It's more of like, if you don't review your strategy, topping up does not solve anything, right? Because if your strategy is giving you consistent negative result, then what's going to happen is you put in 1,000, you lose 300, you top it back up to 1,000, you're going to lose that 300 eventually, and then you keep topping up, losing, keep topping up, losing. That's not the way to go, right? So I think if you set a drawdown of 30% and you hit the maximum drawdown, I think it's good time to again quickly assess if this strategy is effective for you. Okay, I wouldn't say whether the strategy is going to work or not, because all strategy out there to a certain extent works. It's more of like, is it effective for you as an individual trader? Okay, so I know people who trade moving average. Okay, 2 lines on the chart makes a lot of money. I also know people who use moving average and lost a lot of money. Okay, so same method, same strategy, different traders will have very different outcome. Again, whether is it effective for you, you need to assess that. Yeah. Cool. Okay, so the question I think you follow up is when it reaches that number, what should you do? Yeah, so basically I hope just now I shared with you, right? When you reach that number, you want to reassess, okay? Go and review your strategy, go and review your execution, find ways to work on it to improve, okay? And in order for you to do that, of course, you need to have journaling, right? You need to track all your trades, then only then can you. So all these are all very important processes trading. Okay, so hope that helps. Yeah, so if you're fine with this, then of course that part is settled. Then the idea is more of like, If it hits your drawdown, go and review your strategy. Okay. Jian Yo here asks a question on euro dollar. Hear this? Euro dollar feels like it's bullish but slowing down. Okay, again, maybe you need to give me a time frame, right? But based on, I think over here, on this chart, 4-hour time frame, okay, yep, I would agree with you that this looks to be slowing down, okay, but you're not wrong. You're not wrong to say this is bullish too, because on the 1-hour time frame, okay, you do see this pattern, a V shape. Okay, basically it's a rejection pattern, and then this forming kind of like a flat, right? So from a 1-hour time frame, this tells us that the probability can still go higher. Okay, and I would say you're right in that, and also you're right in saying that on a 4-hour chart, okay, I would assume that you're looking at 4-hour chart. This is also slowing down, right? So maybe what's gonna play out is that short term this can go back up, come up to somewhere around this level, about 1.2280, and then from there you want to take note whether this is gonna reject to the downside. Okay, so this actually aligns with the dollar chart, right? If you still remember, we say short term for the next 1 or 2 weeks, the dollar index probably going to be weakening. If the dollar weakens, then of course euro dollar has the room to go up. Okay, so yeah, you're right in saying that. Yeah, so I think great. Cool. Okay, so yeah, I think today's session is really great. You guys are asking some solid questions that open up, you know, a broader conversation, and you know, the two part where I talk about like the art and science of risk management, fundamental versus technical, is really important. Okay, again, trading is not just about like where to buy, where to sell, what price to enter, okay, how much to enter, but I hope really through this kind of weekly session, you start to realize and observe that there's really a lot of things going in to really become a trader. Okay, and it's never gonna be an overnight thing. Okay, you definitely need to put in the effort, need to be disciplined, and the consistency to really put in the effort, right? But I would say the end goal or the result is definitely worth the effort. Okay, why is because, you know, I think in this last year until this year, I think you'll be able to observe that trading the financial market, whether is it trading or investing, right? The financial market is truly a vehicle that is recession proof. Okay. Now there are some people who say properties are also recession proof, and you know some other businesses are recession proof. Yeah, I wouldn't argue on that, right? But I feel that the financial market is truly 100% recession proof. Why? Because whether is it gonna go up, it's gonna go down, you can make money out of it, right? So good economy, currencies goes up, price goes up, or stock goes up, you can buy and make money from it. If things are not good, the prices come down, you can also make money from it. Okay, and that's what we call truly recession proof, because number one, you don't care whether is it locked down out there, whether you can travel or not, whether other businesses are doing well or not. You don't need to depend on them, right? It's a truly self-independent asset, a vehicle that you are able to rely on your skill set. Okay, so have all this in mind. Yes, the journey is not gonna be smooth sailing. It's not gonna be easy, but have the end goal in mind, right? Where I say it's definitely gonna be worthwhile. Okay, so if you're still facing challenges, just keep pushing through. Okay, just keep pushing through. And I hope, of course, a session like that over here today, give you the inspiration and motivation, right? Okay, another question I see here from Ryan asking is which time frame I use. Okay, so a very good question over here. Okay, now in terms of time frame, you need to first also understand what style of trader you're gonna be. Okay, so for me, I'm more of like a swing trading trader, which means I look at slightly longer term, right? I don't go in and out every day. On the typical day, I only spend about 30 to 45 minutes to look at the market, and then that's it, right? Every day I spend about that time. So for me, my time frame is 4-hour to daily, right? And that's where you see me today when I'm sharing with you. These are the few time frames I look at. Sometimes 1 hour time frame, right? Um, these are the time frames I mainly use to execute trade. But I want you to understand that's because I'm a swing style. If today you're looking at very, very short term intraday, then of course your time frame here will go towards like 15 minute, 30 minute, 1 hour. Okay, yeah. I wouldn't encourage you to go below 15 minute. Okay. If you're not aware, I think I share a snippet of a video clip sharing about why you do not want to be a scalper, right? If you have yet to watch that, okay, or you want to understand why I say that, just head over to my YouTube channel. You'll be able to find that video. I think the title is "Why I Say No to Scalping." Okay. Now, I'm not saying about the strategy work or don't work, but I'm saying that as a retail trader, if you want to scalp the market on 5 minute, 1 minute chart, it's not gonna benefit you. It's not to your advantage. Okay. So if you have yet to watch it, you want to find out a little bit more about my opinion on that, go over to my YouTube channel. Just search my full name, okay, on YouTube. I think you'll be able to find it. Yeah. Some of you are already you know, subscribed to the YouTube channel. That's fine, right? I think you have watched that video anyway. Great. Yeah, cool, right? So I see Andrew actually share over here as well. Effort is definitely one. But yes, I agree with you that trading, investing, right? Not just forex. I think basically, if you want to go into the financial market, a certain degree of resilience, okay, that commitment, to really go through and push through those challenges and struggles is needed, right? And that's the reason why you don't see a lot of people trading. Okay, you see a lot of people having that impression that it's a get rich quick thing. They come in, try a few times, and then after that they didn't make it, and then they leave the market, right? Then the next big thing comes in, maybe crypto market, NFT, and then they jump in again, thinking it's an overnight thing, and then again the whole cycle keeps repeating, right? And then there's a next shiny thing that they will look out for, and then the cycle repeats, right? The idea is, yeah, right. You really need that. This the mentality needs to be right. The mindset needs to be right. Okay, yeah. So great. Yeah, I hope today's session has been fruitful to you guys. Okay, has been benefiting you. Okay. That's all for me today. So I hope it helps. Okay. If you have any questions, maybe after that or things like that, feel free to just reach out to me on social media. I'll be more than happy to share with you if you have any questions. Okay. If not, then we'll end off today's session over here. We do this every Monday, okay, for English. So if you like it, tune in every Monday. On Thursday, okay, we do a Chinese Mandarin sharing session, right? So more or less similar structure over here, just that maybe the content might be slightly different depending on the questions asked and of course the market conditions. Yeah. So that's all from me. Okay. Great to have you guys. Appreciate the active engagement. Okay, and I'll see you guys. Right. Bye.